I guess being a pilot, I like having a 35,000 foot view of everything and then zooming down into the weeds. So we're going to start pretty big picture and then get better, or get more granular, so to speak. So let's start over here with the wealth generation journey. And just before I start, how long do you guys have? Do you have roughly another sort of hour?
Yeah.
Yeah, cool. We've got a lot to cover. So again, if I'm speaking too fast, please tell me to stop or slow down. Right, so the wealth generation journey. About 10 years ago, I was broke. I made stupid errors. I left the so I was an RAF pilot. I left the Air Force to become a full-time trader, and I was on my arse straight away, and I blew everything. I was an idiot, and and I really, yeah. So I mean, it was quite eye-opening because I went from a nice cushy job, well-paid job, to pulling pints in the farmhouse pub in Norwich and having a 16 grand a year shitty admin job, which I hated. And I did all sorts of bits and bobs. So I was basically doing two jobs and a part-time business at the same time to really sort of get my head around things. And I had to go back to the drawing board. So I tried to work out what CAGR I needed. So by the way, CAGR is compound annual growth rate. And it's a good sort of thing to sort of have in mind, because the most efficient way to do anything is the straight line approach. If you want to go from A to B, you take the straight line. You don't go all over the place. And so CAGR sort of helps you get there-ish. I don't know that one very well. They're all the same, but this one looks... Yeah, I guess it's just... Yeah. So about 10 years ago, I think I was a bit unrealistic because I had like 5 grand to my name. And I wanted to be worth like £5 million in about 5 years. So when I worked out the CAGR for that, I think it came, about 300% ROI, which I'd have to make every year. So that was a bit unrealistic. And then I had a word with myself, and I tried to be more realistic. And I can't remember what figures I played with, but I got the CAGR all the way down. So I actually gave myself a 10-year target. I got it down to 50%. So I must have just reduced this number. Oh, not £2. That's easy to do. But anyway, yeah, 50% was what I needed. And so I then sort of had that as my little benchmark. So I'm just going to put 50% CAGR up here, because it was my filter. Everything I looked at, I ran it through this filter. Will it make me 50% a year every year? No. Okay, move on. So when you look at the whole wealth generation journey, actually, it looks a bit more like this. Obviously it doesn't go backwards, but what tends to happen is that we enter the workforce between the age of 16 to 22, depending if you went to uni or not, and normally we make our big old financial idiot moves when we're young, dumb and stupid. Now obviously we can make in fact I make dumb mistakes, in fact almost every year, so it's not just when you're young. But what tends to happen is that you end up in some sort of financial hole, okay? And this is where bad things can happen. Like whether you're 16 or 20 or even 40, and if you end up in this financial rut, what tends to happen is you end up going to Google and you find all sorts of crap. So you look at, all sorts of fads. So like, hey, everyone's going, hey, set up a podcast business, or fulfill by Amazon, or join some sort of MLM, or do some crypto mining scam, or like there's so many things. Oh, and don't forget, there's obviously the sea of trading type stuff. There's property, become a millionaire in 2 minutes, 2 minutes flat, all that sort of stuff. And what happens is people end up just hopping from one thing to the next, never actually doing anything, or actually losing money each time. And I did that for a little bit. And so you just got to stop that. And if you're in this hole, the way to get out of it, the very first thing you have to do is just get a job or a business. A business is going to be a bit of a slower burn, but job or a business, you need constant cash flow, right? You need to make sure you have an infinite runway, if that makes sense. So if you've got constant cash flow coming in, that runway is obviously staying away. And then over time, you obviously need to increase your income from the job or a business. But the first thing, which isn't really, anything crazy or new, is that you need to build your rainy day fund. Okay. Now, people have talked about a rainy day pot or fund for a long time, but I have a different outlook. So I think you should have no more than 6 months worth of OPEX. So OPEX is operational expenditure, but I mean this in the personal sense. So going back to that example, let's say you're living rather frugally and your outgoings per month are £1,000. Well, if your rainy day pot, you only need 6 grand, okay? 6 months worth of, runway to pivot. And 6 months is long enough to basically change job, change business, change industry, or, just basically get yourself running again. There's absolutely no reason that you should have 20 years worth of rainy day fund, which is what most baby boomers do. They save, and they never do anything with it. You have to save to invest, not save to save. Because you have to understand that every pound in your pocket or purse or bank account is like a little ice cube, and it's losing purchasing value every single day because the currency supply is like this. Global debt is like this. GDP is flatlining. Unemployment is going through, it's not good to hold cash, basically. I can go on about that. Anyway, so let's get back to this journey. So once you've sort of got your rainy day fund, you'll then have some surplus, right? And then you'll end up with some sort of investable pot. And hopefully you then keep on contributing to this pot, whether it's 50 quid a month or 5 grand a month, everyone's different. But you'll have a pot to play with. Now, when you look at the whole sort of investment world, this is where it gets a bit interesting or eye-opening, to say the least. Because when you look at the world of assets out there, you have 2 types. You have capital appreciating assets and you have cash flowing assets. Okay, this is as bare bones as you can take it. There's really just 2 types of assets. So unfortunately, the public, every man and his dog, is obsessed with capital appreciating assets, and that's where you buy low and you hope you sell high. And here's the thing, you're using hopium, which is the world's worst investment tool. And it's literally anything that you hope that you can flip for a profit. So the most extreme example of this is a lottery ticket. A lottery ticket is like, what, £1 or £2, and you hope you're going to make $1 million, but the success rate is very, very slim. But it's everything. It's stocks, bonds, commodities, property, Pokemon cards, fine art, fine wine, vintage cars, literally anything that you're trying to sell for a profit. Okay, and that's what the public are obsessed with. But then you have cash flowing assets. So really, unfortunately, the list is very small. So you have business. I'm going to put property here, but it's not really. I'll come back to that. You've got debt, and then you have trading. Okay. So first of all, we have business. So if you can do well in business, great, you'll have cash flow. But it's really good because if you do business well, not only will your cash flow increase, but it's also going to end up becoming a capital appreciating asset as well, because you're building up equity in that business so you can sell the business. I'm getting a bit of feedback, so I'm just going to mute everyone. Feel free to unmute yourself if you have a question. Okay? Yay! I'm not getting any feedback now. Cool. Now, a lot of people are getting into property, or have been getting into property over the years, but you're not actually in property. If you're doing it for cash flow purposes, you're actually running a business, and the property is simply your widget. You're no different than someone that sells oranges in the market. You're just selling property, or you're renting your property out. But yeah, so you're actually in business, and property is your widget. But again, if you do this well, at least you'll still have something to sell. If you do have a property, like Dwayne with his buy-to-lets, etc. So there's that. There's debt assets. So you can lend money. However, you need a lot of capital in the first place to make any yield on that. So not many people have money to lend. And then there's trading. So I would say the key word here is eventually. Not straight away. I know the internet likes to lead you to believe you can make money very quickly with trading, but it's pure bollocks. That's the only word I can think of. It's just poppycock. And we'll talk about trading in a sec. Now, in terms of milestones with this wealth generation journey, two things. So yeah, we've got, I guess, financial independence and then financial freedom. Now, financial independence is not what it's all cracked up to be. Everyone online is going, hey, become financially independent. Well, again, people do not understand context, because let's say you're this person over here that's only having £1,000 a month outgoings. Well, to be financially independent, your investments only need to bring you £1,001 a month. And then whoop-de-doo, Basil, you are financially independent. Are you comfortable? Hell no. Are you safe? Are you financially safe? No, you're not. Because although you may feel you're in a passive investment or passive assets can very quickly turn into horrible active assets which are losing money. For example, I've got a bunch of different businesses. There's one business which I probably spend an hour every 3 months working on, because I've got a manager in there, a team, and the manager runs everything. I'm just a silent shareholder pretty much. But now that business is lying face down in the water, it's gone from a nice passive business that was chucking out a little bit of cash flow every month to now losing horrid amounts of money. And now I'm very active trying to firefight that thing. So same thing could happen with property or whatever. So you don't want to aim to be financially independent. Unfortunately, these days, if you want to be safe and not give a shit about what's going on in the world, you need to be financially free. And that it means F off money in whatever is F off money for you. Everything is relative these days. I mean, I've got a friend, he's probably taking home about 50 grand a month, but he's in debt because he spends about 60 grand a month. He's an idiot. And I tell him this every time I see him. You're an idiot. All he needs to do is just cut his lifestyle. Come and live in Norwich with me. And he'll be fine. Because he'll still have his 50 grand a month. Then all he just needs to do is cut, 20 grand a month of his outgoings. And he'd be, happy, or better off, but he won't. So everyone it's all relative. Now, going back to the assets over here. Everyone is obsessed with capital appreciating assets, whereas billionaires, you have to do what they do, not what they say. So billionaires spend 90% of their time, focus and money in cash flowing assets, and only 10% of their time, focus and money in capital appreciating assets. So guess what I do? I simply follow the breadcrumbs that the big boys leave behind. So I focus all my time over here. So actually, probably 99% of my time is actually running my businesses. That is it. and because they do well, or some of them, I'm building up equity so I can sell them in the future, etc. So now, when you run everything through this filter up here, the 50% per year CAGR, well, what cuts the mustard? Well, pretty much nothing. So I have to completely disregard capital appreciating assets because you can't rely on hope. So you're left over here. And the only thing that consistently makes 50% a year, if you do it right, is business. That is it. That is it. And what I found very early on in my trading career is that trading is simply an amplifier or a magnifier of the capital that you have. So I lost about 100 grand in my first 4 years of trading, and then it took me about year 6 is when I started getting profitable. Yeah, I've been trading, that makes sense. So I've been trading 16 years now, and it's only been in the last 10 years I've been profitable. But the thing is, back 10 years ago when I was broke, I could easily make 10-20% per year on the markets from trading. But when I look at my account, I had bugger all money. So I'd spend a whole year of hard graft trading and I'd make £1,000 profit. And I'm like, God's sake, this is just a joke. And so I quickly realised, okay, trading, I just need more capital. So what happened is I then had to pivot. And so if we go over here, what I did, if we look at what I do with my own money, it's this. So I've got my group. Well, I've actually got 3 groups here, but there's 9 limited companies over here, and some of them make profit, some don't. But when they do, I just reinvest it back in the businesses. So this is what I call first order profits, and then I keep on growing them. And then eventually there's going to be surplus distributable cash flow. And that's what I call second order profits. And that's what I put into my various trading accounts. I've got a bunch of different trading accounts. I then magnify all of that capital. I mean, hell, because trading is not risky for me anymore, I even put my VAT money in my trading accounts. Because VAT money, technically it's not yours, it's the government's, but you hold on to it for 2 to 3 months. But for me, the way I see that is, well, shit, this is free money for 2 to 3 months that I'm paying 0% APR. I may as well turn a few percent on that and then give it to the Crown. So, yeah, I do that. And then eventually my trading makes profits. And then I buy other stuff. Now, when I buy other stuff, typically for me, it's been I've bought more businesses so I can add it up here to increase that flywheel effect. But typically, I just buy crypto. So if we go back over here, because I've got so little of my time, money, and attention into the capital appreciating assets, for anything to be worth my while, it needs to be extremely high yielding. But at the same time, most likely high risk as well. So the only thing I buy over here is crypto. And the reason being is that the risk to reward ratio for crypto is just obscene. Obscene, literally. So whenever you're looking at risk to reward, so risk to reward, or some people call it the triple R, risk to reward ratio. When I look at crypto, it's just nuts. So originally I was like, okay, well, if I'm going to put 10 grand in crypto, what's the risk? Well, the risk with crypto is that I can be minus 100%, okay? I could lose the passwords, I could send it to the wrong address, I could be hacked, an exchange could run away with my money, like all sorts of things out there with crypto. So what's the worst that can happen? I lose all my money. Okay, but what's the upside? Well, the upside is like, 1,000% or 10,000% or more. And so I put it into practice. So what I did back in 2017, I saw a hype cycle coming along. So what you'll learn as a trader is that you're not actually trading the markets, you're trading people. I trade people. I'm effectively trading people's attention and their reactions, because we live in a world of ever-changing variables, but the one constant that never changes is us big hairy monkeys. Well, not that hairy these days, but we are stupid. We humans as a species, yeah, we're quite clever, but we're also dumb in the fact that we always do the same dumb shit all the time, different asset, different time. And so humans as a mass are extremely predictable. And so I saw back in 2016, I was like, okay, I actually need to get into crypto because I saw this big old hype wave coming. So I opened up a live $25,000 account and I posted every single trade publicly. So everyone saw what I was doing. And literally in the space of 4 months, that went up to $1.1 million. Now, that was pretty cool. And annoyingly, people quote me on just this bit here, which I cringe because that's not the full story. Because people like to focus on the wild stuff. But what actually happened is I got out of crypto too late. I got a bit greedy. I thought I could probably stretch, because at that rate I was like, well, at this rate I'm going to be worth 10 million in no time at all. So I was a bit greedy and I held out too long. And what happened is I lost about 700 grand in the space of a week, or $700,000, and I actually ended up at 350. My maths is shit, but yeah, it was about 350k. So for about 2 weeks I was actually wildly depressed because my brain couldn't connect that I'd done this to here. All my brain was focusing on was I went from that to here. And this is, trading psychology. And it happens to everyone. Obviously different numbers, etc. So, that was a bit of a tangent. Let's get away from crypto. Let's not talk about crypto. But if you do buy crypto, treat it as a binary outcome and a 3 to 5 year play. Whatever you put in it, be willing or be very prepared that you lose all of it. Or it could turn into a nice fortune. But don't day trade it. Don't look at it every day. Just buy it, come back in 3 years, and then lend me a $5 when you've done well. So that's, I guess, my setup over here. Now let's take a little magnifying glass over here and look at the trading. In fact, before we do that, any questions so far? I know I've sort of rattled through this.
With these cryptocurrency. It's like originally it was just Bitcoin.
Yep.
But now there's just so many, and it's like, well,
yeah.
There's Ethereum, there's Litecoin and stuff. It's like, well, how do you know what ones are going to be
so
use?
there is So in fact, when I first started getting into crypto, there was about 700 cryptos. Look at it now, there's 7,857 cryptos, and that's literally in the space of 4 years. And that's only going to explode even more. So yeah, you're right, there's shitloads, well, thousands, literally. If you're ever bored, I would literally go to Siam Kid on YouTube and just watch some of my videos. Like here, hey, that's the ones I'm wearing now. So this is I went on a dog and cat walk, and I just did some verbal farting, and I talked about everything: business, life, trading, crypto, lockdown, bullshit, all that sort of stuff. Have a look at that video, because I do cover that a bit more. And then if you go on my channel, if you really want to get into crypto, hey everyone, go to the playlist one, and there is a crypto playlist called Free Crypto Basics Video Course, and I've put 60 plus videos in here. Is it 60, 50, almost 60, and it's literally everything you need to know about crypto for free. Like, you can literally know everything about the exchanges, what to buy, when to buy, blah blah blah, all the mechanics, and then the more recent ones are down here. Or if you don't have, probably 20 hours to go through all these videos, you can just skip down to this end one here and watch this 2 hour, 15-minute video. That literally covers everything in a nutshell. And there's all of this to fall back to. So that's crypto. I could talk a lot about crypto. For just a quick one, because it's, I guess, not relevant to this. If, let's say you got a bunch of funds that you want to play with, and that's your pot that you're going to put into crypto. Personally, if you're going to do nothing, or very little, I would put 50% into Ether, 25% into Bitcoin, and this 25% here is what I call the Kryptonian portfolio. And this is where you basically become your own little tracker fund. So you simply buy the top coin or top 2 coins in every sector there is, and that way you're not going to miss out on any ones at Moon. So like with stocks, you have tech stocks, pharmaceutical stocks, financial stocks, etc. Crypto's the same. It has its, you've got advertising cryptos, platform development cryptos, privacy cryptos. Just buy the top coin or 2 in each sector, and you'll end up with probably like 40 or different cryptos here. But that way you're basically becoming your own tracker fund, and you'll always do well. So, Dwayne, did you have a question? Yeah?
Yeah, quick question. How do you determine what's the top one?
Oh yeah, so if you go to here, let's try and find it. Come on. Oh, where is it gone? It's not Masaru on chain FX. 1 second. Aha, here we go. Come on. Oh, I haven't looked at this for years. It's going to... they've just changed the website. Stand by. Screener. Oh, got to be on Screener. Oh, I was right. Masario. It was Masario. Okay, so if you go to Masario... If I'll put it in the chat box. Stand by. So if you go here, you'll see this big old list of crypto. Now, if you go over to sector and just alphabetize the sector, you'll see that there's advertising cryptos, AI cryptos, app development, asset management, centralized. There's so many sectors. So all you do, is just pick maybe the top coin or top 2 coins in terms of market cap in each sector. So if I was going to, let's just pick a random one. Let's look at, I don't know, data management. Okay, there's quite a few here. I would simply look at the market cap here and look at which one has the most money. So there's this one, Cybervein, that's got $98 million. Yeah, that actually looks like the biggest one in that. Oh no, this one, sorry, Chainlink, 5.25 billion. So definitely get that one.
When you say has the most money, what do you mean? Who has that money?
Well, that's the market cap. So that's technically the amount of money that's sloshing around in that crypto.
Right, okay.
Technically, if you want to get pedantic with, or not pedantic, but if you, by definition, market cap is the amount of cryptos in circulation divided. So the amount of current money in that crypto divided by the currency supply. But yeah, don't worry about that. So yeah, just look at this. But yeah, let's move away from crypto because.
Can I just ask one question with regards to it, crypto? What platform would you use for that?
Kraken. So I personally use Kraken. If you go to kraken.com, you simply put money into kraken.com, so GBP, no doubt. We're all in the UK.
Yeah.
And then you buy whatever there. I don't know, let's say you're going to buy Ether. You buy Ether on Kraken, and then you take that Ether and put it in your own wallet. You need to own your crypto. Don't let the exchange own it for you. And again, in those videos, it shows you how to do it. In fact, I actually made a brand new update. If you go to my videos, here we go. Setting up an Ether wallet in 2020. Quick 5-minute video. Hey folks, sign here. And yeah, let's just do it this way. You can store it on a wallet on your phone, etc. So you can go through all that. Who's downliked my video? Honestly, I have every video I have about 5 downlikes, and it's consistent. Every video has about 5 downlikes, and I swear it's the same 5 trolls that follow me. Anyway, moving on. So that's the wealth.
Sorry about that.
No. Oh, is that you downliking it?
I'm joking.
So that's the wealth gen journey. Oh yeah, trading. Let's have a little look at the trading. I'm aware of the time. I want to, because there's quite a lot to go through. Right. So I guess with what I do is I've got lots of different accounts, but in essence I've got two main accounts. So one is what I call my DIY pension account. Oh, my feet are freezing now. The draft is coming down the window under my feet, but my top half is boiling. Anyway, I can't unzip myself either. I'm not wearing anything under this. So the DIY, you didn't need to know that. Then we have my crash account over here. Okay, so with my DIY pension account, I've got probably 90 to 95% of my money in here, and this is because it's safe. There's no silliness at all, so let's just say it's not risky, and I just let my trading robot do all of my trading for me. So the bot does 100% of the trading. I literally don't touch that account at all, which is pretty cool. I'll talk about the bot in a second. Probably worth adding. In fact, can you just remind me to talk about the bot if I forget later?
Yeah.
So that's that. And then with my crash account, I've probably got 5 to 10% of my money in here. And this is effectively my all-in account. This is where I'm really super aggressive. And like, for example, my bot may be placing trades where it's only risking, say, 0.25% per trade. So of the whole account, it's only risking 0.25% on each trade. So it's barely risking anything. And some people get confused about that. So let's just give you an example. So let's say you've got a £5,000 account. I'm just going to get my calculator out. £5,000 divided by 100, so that's 50 quid. Divide that by 4, £12.50. So if you have a £5,000 account, what that means is every trade you're only going to be risking £12.50 per trade. So it's barely any risk. I mean, hell, you could lose 10 trades in a row and you'd only be 2.5% down. Well, it'd actually be a bit less than 2.5%, probably 2.45-ish. But yeah. So that's my safe account. But then I see some great trades or setups and I go, oh, I need to get in on this. So and I've got a bit of a gambling streak in me. So this is really just a coping mechanism because I'm an idiot. So all my money's over here nice and safe, and then I just have a little flirt account. I call it my crash account. And as such, I blow this account up probably 3 to 4 times a year. But hey ho, probably every 18 months, or probably once every 18 months, I will then 5x or 10x that account. Easy. And the winners I get here offset, several years worth of losers. So recently I just grew an 88,000 account to 200,000 in about 2 months. But huge amounts of risk in that account. In fact, you can just here's the actual generated report. So yeah, I got my little horns of greed out here. If we can, here we go. So I funded a new account, or an old account, started at 88.5, and as you can see, the account is just growing over a 2-month period. And then if I scroll down even further, and then pause at around, oh no, sorry, I've shown you an old account. This is a new.
Is this a bot that you just have different parameters on?
No, this is me manually trading.
Right.
So, okay. Evidently you've got some old reports here. I'll have to get some new ones. Anyway, so let's get rid of that. So yeah, and then what happens? I divest the profits into back over here, etc. So that's what I guess I do in a nutshell. Let's get back to this list because I just thought of something else. So let's talk about the bot, because I will forget, and then I think I'll talk about learning journey. Oh, balls. Oh, my coffee's gone cold. Cool. Okay, so everyone happy for me to proceed? Everyone okay with the learning journey? Yep. Cool.
Yep.
So I guess now is probably a good time to cover this question. Is it right for me? And the moment you asked that, Dwayne, and I had the answer straight away. And I think you, after listening to the Wealth Gen journey, you probably at the same conclusion that trading probably, most likely, is not the best course of action. For actually a number of you, maybe all of you in this group today. Because if it is relatively short, quick cash flow that you need, trading is not going to be that. Unless, the only caveat there is unless you have capital just lying around. And I'll talk a bit more about that in a second. Because if you need cash flow, really, it's probably not what you want to hear. But most of the time, the thing that you don't want to hear is normally the advice or things that you need to hear, if that makes sense. So I would go and get a job or 2 or 3. I would look at setting up a part-time online-based business, something not retail, as in not like bricks and mortar, not high street, nothing tourism or travel related. Basically all of the industries that are getting hammered. Unfortunately, this is the new paradigm. So if you are setting up a business, set something up which would work. Hell, it could be a subscription type business or whatever. So have a look at that. That, in terms of cash flow, that will be the quickest bet. Again, that's as risky as trading to begin with, because we all have heard the stats. 9 out of 10 businesses fail in the first year, and then another 7 out of those 10 businesses fail over the next 5 years, etc., etc. But 10 years ago, I looked at that stat and I was like, right, game on. I'm just going to set up 10 businesses over the next 10 years, and I'm bound to strike lucky. And lucky for me I think it was lucky business number 3 or 4 that did well, and then onwards it's been great. So it's just like anything, it's just a skill. Once you know the skill, it's easy. So is it right for you? It really depends, again, what your runway is, what your objectives are, and just be aware that trading is a slow burner, okay? However, I wouldn't let that deter you, because what tends to happen is, I've said this to people before, and people come back to me, 5 years later or whatever, and saying, Siam, thank you so much for telling me not to trade 5 years ago, because my head wasn't in the right place and my back was against the wall financially, blah, blah, blah. I did what you said. I've, gone and set up a business, doing really well, but I'm now in the weird situation where I've actually comfortable now, got money, but I don't know what to do with it. And now I want to get into trading. And so what these people have said, and it's not just one person, it's a handful of people, they're saying that they wish that they took my advice and learned how to trade, like a hobby, so to speak, passively, very quietly in the background, not relying on it, but just learning it, but then focusing on, a business or job or whatever. But then, so that in 5 years' time or 10 years' time, when you finally are wealthy or have capital, you'll know exactly what to do with it. Does that make sense? So you're doing things in parallel. So you can, learn on a dummy account for all that time, if you wish. And a dummy account is where you trade with real life markets, but with fake money. So there's no risk. So I guess that would be my suggestion. I would, have a look. So I guess if that is your boat, I would have a look at the wap.org. And I made this long before Cardi B was even a celebrity. If anyone's heard of that song. What's going on here? Sorry, I'm just logging out of the WordPress. So the WAP is basically the Wealth Action Plan. It's literally everything your parents, teachers, peers, boss and government didn't teach you but really should have. And it's what your schools God, I think schools are negligent that they don't teach you this stuff. So it's not the teacher's fault. It's it's Ofsted and it's the system. So yeah, basically in a nutshell, you learn everything about money, investing, economics, but mainly it's all about setting up your own part-time business. So I would literally just go and do that 30-day trial. It's free, and this page needs changing, but it is free. It used to be £1, don't know why, but yeah, and that will basically show you loads and loads of stuff. Typically one of the things I always I get pitched probably 3 or 4 times a week, going, "Hey, I've got this new startup. Can you invest in it?" Because I'm an angel investor as well. And so I created this thing, and people always come up to me, "Oh, I've got this $10 billion idea. It just needs some money." I'm like, "No." Or, "I've got this great idea. The total market cap is £10 billion in the UK. All I need is a tiny sliver of it." No. I'm just going to squash this myth now. So, for example, I had this. Omit the company or the person, but they literally, I think the market cap, they said in this industry it's £10 billion a year. All I need is 0.1% of that, or whatever it is, and basically I just need to get 10,000 companies, or I can't remember this, to all pay me. I think it was like £200 a month, and then this business is, as in my new business, is going to be worth stupid amounts of money. And I was like, oh dear Lord, okay. Well, first of all, how much do you think it's going to cost you to get one customer? So, cost per acquisition is something which no one's really ever heard of, especially in the startup world. And cost per acquisition is how much is it going to cost you to get one customer? And, if they're paying £200 a month, what is that? It's 2,000. So this is how bad at maths I am. Yeah, it's 2,400 quid a year. Well, guess what? It's probably going to cost you at least, £2,500 to get you one new customer. So all of a sudden, you're spending £2,500 to get a new customer, and you want 10,000 of them. Okay, what is the maths there? Okay, well, you just need £25 million worth of ad spend, as in marketing budget, and you'll get there. That's what, when you look at all the unicorns, Uber, Airbnb, all they do is they do massive crowdfunding rounds. They get shitloads of money, and they simply buy up their user base, and then they can turn a profit by flicking a switch. But and so really, it's idea multiplied by execution. And if you're new to business, your execution, I promise you, will be in this quadrant here. It's not being offensive; it's just empirical data. And then divided by your marketing budget. And your marketing budget, if you're a brand new startup, never been in business, will be here. So, you can have let's just do the maths. You can have a great, let's say a great idea. So 15 times, let's say it's going to be weak execution at best. So 15 times 1,000. So you're there at 15 grand. And your marketing budget will be between here. So you divide it by 10. 15 grand divided by 10. What is that? A 1,500 quid business. Yeah, it's about right actually. So, wait, is that right? 15 grand divided by 10? It's embarrassing. I used to be an Air Force pilot and I can't do simple maths. So, you don't need any maths for trading. You don't need to worry. So let's get rid of annotations. So, if you guys are talking, you are muted. So if you have a question, just unmute yourself. Let's get rid of these annotations. Stand by. Right, that was a bit of a sidestep. Sorry, I'm just wasting all of your time. Hopefully it's still helping though. Let's get back to those questions. So hopefully that's answered the question, is it right for you? I'm hoping, again, I'm using the word hope quite a lot here today, that you're probably hearing things you don't want to hear, but it's the truth. Okay, trading is not a get rich quick thing, and it's not a short term thing. So, yeah, go for it, Dwayne.
I know we're time sensitive at the moment. In terms of, does it have tangible business ideas? Is it going to say, hey, this is what people are doing now, it's working, or do I have to go away, cultivate something, and then come back and apply some theory?
Yeah, so we do give lots of different ideas. There's loads of different things, but if you will obviously you have to go and come up with your idea. You can copy stuff, so this is what it looks like in the portal. There's loads of resources, but in that trial you get a lot of videos and tells what's the best business model for you, all that sort of stuff. So it will help. To put it into perspective, I always put money where my mouth is. So people said, Siam, business not like that. You can't just follow a checklist, yada yada yada. And I was like, well, yes, you can, because it's what I do. So I've got one thing you'll learn is I have this thing called the I-Pac-Man method, and it's basically I go through all of this, and I was like, right, I'm going to create a brand new business from scratch in an industry that I have zero knowledge of, and in the WAP, what we talk about is getting you from so in business really the milestones is basically going from 0 to £300 a month profit. That is the hardest freaking stage of business. But then going from 300 to £3,000 a month profit, that's so easy. It's ridiculously easy. Once you get this first hurdle done, everything is easy. It's just this first bit really hard. So what I did in November, so it's been about just over a year now. In November 2019, I set up. This is somewhat embarrassing, but it's not embarrassing. myfairypenpal.com. So an industry I had zero knowledge of, and I did it with my wife, because my wife, she's at home all the time. And so we thought, hey, screw it, let's do it together. And I'm just going to go through iPac-Man and just literally do everything step by step. In fact, what we did, where's my checklist gone? It's here somewhere. Come on. Sorry, I have the messiest desktop on the planet, which is why I can't find anything ever. It's here somewhere. Okay, it's irrelevant. You don't come on, I'm sure it's here. Oh, never mind. It's in the WAP. You'll find it. But there's a literally step-by-step checklist, and that's all we did. And so, My Fairy Pen Pal is literally we send, or Aria the fairy sends a letter to. It's aimed at girls between the age of 4 and 10. Every 2 weeks, they send a letter with activity sheets and gifts every now and then, and yeah. So we get loads of feedback. We've got a whole wall of letters sent to us in the office. But what happened is that I was like, well, let's put our money where our mouth is. That is what we teach in the WAP. We're not trying to teach you to become millionaires. Just literally, if you can get £3,000 a month, will help pretty much anyone. An extra £3,000 a month. So in 2 months, we hit 300 quid. Oh no, we hit 400 quid a month profit within the first 2 months. And a year or 13 months on now, we're doing about £4,500 a month profit. And we've employed 2 full-time people. So it's 2 full-time people, and even after their wages, it's still £4,500 a month. So I don't do anything with that. I just do the marketing. Ellie, my wife, she's written all the letters, but the staff now do all the postage and packaging, and we're sending out literally hundreds a week. It's nuts. So you can do it. It doesn't matter what business idea. Anyway, let's move on. So wow, this is turning into a business Zoom call, not yeah. So yeah, check out myfairypenpal.com if any of you have daughters. It's really good. I know I'm biased, but the feedback we get prove it is good. So anyway, moving on. I'm not going to talk about. It's been an hour, so I'm not going to talk about expectation today. That's probably another 15 minutes. Let's talk about. So this is a more sort of granular trading thing, but don't worry about that. One other tangent, very quickly before we go any further, which will answer everything, is that if you go to therealistictrader.com/free-trading-test drive, here we go. I'll put that link in the group. In case any of you have to shoot off, I know we've been an hour and you probably only budgeted an hour here today. So if you go to this link, this is what I've done is I've got rid of all the excuses anyone could possibly come up with, and all the barriers to entry. So in here, I've created a 2-month free trial, and in this 2-month free trial, you'll get 15 hours worth of video, access to my trading bot, so you can open up a live account, put money in it, and let the bot do all the work for you. And access to 2 live sessions every week for 2 months. So with me, my trading mentors, you have access to the Facebook group, etc. So literally everything. And it's for free, literally. So I guess the financial trade here, because there's always a commercial trade. So the trade here is that the trial will teach you everything you need to know, so that you're fully informed. And if you find that trading's not for you, or you just don't like it, or you don't like me, great. At least you've learned something, hopefully, and then we can still be friends. Or even better, if you like what you see and you want to become a full realistic trading student, then you can. So that is the trade. I'm just giving this out for free, and by the law of statistics, some people like me, some won't, some will. So what? Move on. And so this is the group that you have. We only launched this about a month ago, so we've got 300 members here so far. Well, free trialers. Obviously, in about 2 months' time, that number is going to drop off a cliff. But yeah, so, and the 2 live sessions every month will help. And if you look at the portal, so look at all of these videos. So again, like anything, I'll start with the big picture. So level 1 mechanics, big picture stuff, how the world actually works, all that sort of stuff. You get all of these videos, like 15 hours worth of videos, all the way up to level 5. Yeah. So, and when you click on each of the videos, it looks, if it looks like this, click on it. So there's a video, and then if you have any questions, put them down here, and I will answer them, etc. So that's the trading test drive. It's totally free, and you'll learn more about that. So if you're worried about missing out on what that trading expectation thing is, just do the free trial. So let's talk about realistic expectations, okay? So this is probably more relevant to what we're doing today. So realistic expectations, I guess, let's put it this way. Let's draw a human. That's supposed to be a human. And let's draw a robot. I'm really good at drawing. That's a robot, by the way. Okay, so let's just say you have a human trader, so a manual human trader. They're proficient, they've been trading for a few years, they're rule-based, they're no emotions, which is good for trading. In terms of what you can expect to earn, well, I can't give you a straight answer. No one can, because everyone is different. So really, so long as this person's disciplined, a really bad year will be minus 10% ROI. And a good year will be anything, say, 10 to 20%. I can't type. I can't write. Sorry, 10 to 20% per year. Okay? Now, people are saying, well, why can't you give me a straight answer? Well, I just can't, because everyone is different. So I use the maths analogy. So I'm not good at maths. I never have been at school. But guess what? When you're at school, you are sat in a classroom with a whole bunch of other kids, identical in age, pretty much, plus or minus a year. You're in the same school, same town, same clothes, same syllabus, same workbook, same boring teacher at the front, same whiteboard or blackboard, same workbooks. Everything's standardized up the yin-yang, right? But guess what happens at the end of the year? You have some kids that are really good at maths, some kids that are really shit at maths. Hello, Siam. And then normal Gaussian distribution, the masses, the bulk of it will be completely average, okay? So it's like saying, well, why isn't everyone the same at maths when everything's standardized? Well, because some people are just not mathematically gifted and some are. It's the same with trading. I've taught thousands of students now, and I've taught them identical things. I'm personally making money on the markets, yet, and you would expect, well, surely everyone else is as well. Well, some don't. Some people probably won't even listen to the rules. Some people break the rules. So I just can't. Yeah, I can't. I guess that's just normal, same with anything in life. Now, here's the thing. If you have a robot, now I've tried to get a trading robot working for about 10 years, and I've probably lost about 50 grand in development costs, software development. Like, I've kissed so many frogs, it's ridiculous. Because every coder, when you try and employ a coder, it's like, yeah, I'm amazing. I'm like, I'm the next Elon Musk or Zuckerberg. You employ them, and a month later you realize all they can code up an Excel spreadsheet. Like, it's like they do not walk the walk, and they're useless. So I've wasted probably 50 grand trying to build a bot, but I finally got one 10 years later. So with the bot, it's interesting. So it's no, really, no, even though I've got a fancy new machine learning bot, etc., at the end of the day, it's no more sophisticated than a vending machine, really. And a vending machine is full of, if this happens, then do that, right? You put a pound in, type some digits in, and then out pops your Snickers bar, or Mars bar, or whatever. So a vending machine is just doing that. And a trading bot, even though it's, a machine learning one, it's the same thing. If I code up a really shit trading strategy, a negative expectancy trading strategy, guess what? It's going to chuck out losing trades, isn't it? If I code up a really good strategy, it's going to chuck out some good trades, okay? So a trading bot is two things. It's something which can execute a system, but then you also need a good mathematically you need a positive expectancy system, so something which is profitable mathematically speaking. And so with a good trading bot like ours, a really bad losing year, you could probably, again, minus 10%, okay? You can't predict the markets. But here's the crazy thing. You're looking at actually anything from 20 to 60, oh God's sake, 60% ROI plus. Now, part of me cringes inside when I look at call it 40% a year, especially for the last 16 years. I'm like, I've always called that out. I'm like, bullshit every time I've seen someone saying, I can make this. But here's the thing, a good trader, let's say they make 10-20% a year, they're missing out on between 50 to 99% of valid trade setups, because we're eating, sleeping, working, we're not at the charts, we're not doing trading, so you're just never at the screen. Whereas a robot never misses. Ever. Never misses. It's trading 24 hours a day, 5.5 days a week. So look at this. I'll show you actual real logs, and no traders out there on the internet do this. Here we go, just loading them all up because I'm in Norwich and I don't have internet properly. Oh, by the way, sorry, browser just opened up. In my Instagram, I will never show my winning trades, but I will always share my losing trades. So here, all these screenshots are individual trades which I've just lost. So you get what you see with me, and I'll just lift my skirt up regardless. So, but yeah.
Can I just ask something?
Yeah.
You put that you don't risk more than a 0.25%.
Yeah.
But you're losing like 28 grand there.
So if we go back to this thing over here, all those big losses are from my all-in account, my crash account. So here's the thing, I've got lots of trolls, and I guess my Instagram is just fueling all my haters. They're like, you're such a shit trader, Simon. Look at you, just lost. That was actually an 85 grand loss there because it was the 3 trades all at once. I'm winning a lot more than I'm losing, by the way, in this crash account. Yeah, so this was, as I said, 3 identical. So what is 28.3? What is that? 28.314 times 3. 84.942, yeah. So, but my whole account, I still made like 100 grand profit in the last month or so. So what was I? Oh yeah, sorry, the logs. Sorry, transparency. That was all right. So if we look at my proper account, my boring bot account, as in the one which is completely safe, it's so boring. If you look at my analytics, here we go. So first of all, this has probably caught your eye. This is not losing trades. This is me withdrawing money back in September to fund that crash account. In fact, we can probably show you. I know it's an old report. Oh yeah, this was the updated one. Yeah, this is 200k. What is it, like 100 and something profit? But if we look back at where I funded it, where was it? 8th of September 2020. I put 82 grand in from my bot account. Here we go. Obviously, I can't put my mouse on it, but yeah, that was just me withdrawing it. But if you let's just look over here. This is why I say it's really boring. It's August 3.03%, September minus 1.62%, October 0.83%, November 1.96%. December so far has been great. It's like 4 days into the month and we're 2.95% up. So this is, and I do nothing. Literally, what happens is, just very quickly, with the bot, where did my bot go? We've done a lot of squiggles, it's over here. So there's 2 modes with the bot. there's semi-autopilot and there's full autopilot. Okay, we've called, obviously with my flying background, I had to call it autopilot. So semi-autopilot, basically, this was actually my original goal to begin with, because back over the years I've been a screen slave. Okay, because especially if you're doing high frequency trading or whatever, you're like, if you're not by the charts, you're not winning. So semi-autopilot effectively breaks you free from that screen slavery, and it sends you a text message of every setup it sees, and all you do is press yes or no. So the bot goes, hey, I found a trade, do you want to take it? Yeah. And then the bot will do everything else. So it basically reduces your trading to yes or no's. But for the even lazier of you, or not lazier, for those that really can't be asked to press yes or no, or if you're like me and have no freaking phone signal in this house, so I can't even receive bloody telegrams, I've just put it on full autopilot. So what happens is the bot looks for trades, it places it conveniently tells you, hey mate, I've just placed this trade, and then it will manage it for you. So if we look at my Telegram, so here we go, realistic trader bot, and these are all the trades that it's placing. So today at 9 o'clock this morning, it placed a trade, or if you like also 6 o'clock in the morning, I was fast asleep. I got no sleep last night. Hey Siam, place this, blah blah blah. Would you like to take it with 0.25% risk? And you can simply click that. Oh, I need to log in first. Stand by. Okay, now I'm logged in. I can click on it. Here we go. It'll then open up the chart. You can see down here is auto confirmed because the bot just placed it for me. And there you go. So you can see, if I zoom in a bit. Oh, come on, silly. Sorry. My mouse is being silly. So that's the stop loss up here. That's the take profit. And hey, it's just a little bit in profit. So let's actually just click on some older trades that have played out. So let's look at what happened. What was this? Oh, this was yesterday. So that'll still be there. Let's just click on second. Sorry, it's been placing quite a few trades recently. Okay, let's look at this one. So this should have played out by now. Most trades last a couple of days, really. So this looks like yeah, there we go. So this is actually a beautiful trade, because what happened is that it went in profit, it took profit straight away, and then it bombed, which is great. Let's click a random one. What was this one? 2RTJ. Here we go. Here's another one. Place it there. Hit target up here. Yeah. So that's it. And my bot literally does it all, as you can see here. 3% up. And if you look at the leaderboard, so we've got two different leaderboards here. So we've got a manual trading leaderboard. Come on, internet. Here we go. So if we look at Ashley Brewster, so this is just for my students. You know, he's $3.5 grand up today, or this last 30 days. Written $2.5 grand, Mark, etc. So they're all doing well. But then if you have a look at the bot, so the bot leaderboard is awesome. So we have two strategies coded up: the trendy jibe, the TJ, and the bolly bounce. So this is the leaderboard for just the TJ. So if we look at this one, so let's look at, okay, Augustine's set up an aggressive one. Let's look at a non-aggressive one. He's only done 22 trades. No, let's look at Kevin, I guess. Yeah, Kevin. He's done 181 trades. So he's been doing this for about a year on the bot. He's 10% up in real terms. He's on track for a 13.3% year. Mind you, look at the drawdown. That's not good. So it's actually not the best one there. So you know, a lot of people ask what drawdown is. Drawdown has nothing to do with how much money is in your account. It's all about local peaks to trough. So let's say this is time, and this is the money in your account. If you're a shit trader, this is what's going to happen. Yo-yo returns. Make shitloads of money, lose shitloads of money. That's not what you want. A good trader has like a jagged edge type account equity curve. So what drawdown is local peak to local trough. So here, so local peak, local trough. So what you need to do is you need to ensure that this drawdown is between 0 to minus 5%, really. You don't really want to draw down more than 5%. Does that make sense? So you had, this could just be a whole bunch of losing trades and then just a bad patch. Because sometimes you will get, 5 or 10 losing trades in a row. It's just, just normal statistics. And so the reason why I said Kevin's one wasn't that good is because look at this. He's accepted a 12.5% drawdown at some point. So that's not that good. This one, oh no, it's 18 trades. This one's better. Oh yeah, look at this bad boy. Rowan. I need to check Rowan out. He's okay. So when people are saying aggressive, what they're probably doing is just eking up the risk. But yeah, he's done 103 trades. He's 9% up, on track for 142% year. Very low drawdown, really good. However, the thing is, the trendy jibe hasn't done that many trades this year because the markets have been choppy as shit. Whereas, sorry, excuse my language, the Bolly Bounce, which is designed for choppy ranging markets, has been on fire. So Shemile is one I've actually been looking at. Shemile's bot, I think, is the best one here. So I know he's second, but he's done probably he's got a nice amount of trades here. He's 16.9% up in real terms, real live money account right now. And he's on track for a 60% year. And look at his drawdown. Worst drawdown is only a 5% drawdown. So this is absolutely amazing. And I know already that this isn't an aggressive setup. This is just, as you can see here, best portfolio BB. He's just copying the standard settings. Sam, he's done 22 trades, so it's hard to, mind you, 0.5. Yeah, he hasn't been here. I would take this with a massive pinch of salt. He hasn't done that many trades. Moran, who's this one? Dante, yeah, high risk. Yeah, this one's good. James, whoever James is, 43 trades. Yeah, so actually you can see how long he's been doing this. So 43 and it's averaging 0.5 trades a day. So 43, divide that by 0.5. That's 86 days he's been trading. So that's roughly, probably in real terms, about 100 days. So he's been with us 3 to 4 months, which is good, and he's 7% up and on track for 35% year. Very little drawdown so far. So that's the bot.
So how much can I ask?
Yeah.
The people who use this, what sort of money do they put in their account?
Whatever they want.
What kind of levels? I mean, typically, because I saw that it works out. Is it 4,800 annually or £500 a month? I mean, you'd have to kind of put so much in to get so much of a return to kind of negate that.
Yeah. So in fact, let's just, as a valid question, I'm gonna answer that in about a minute, if that makes sense.
Okay.
Let's just quickly jump down here to the learning journey. So because that explains it. So when I talk about so let's so when you're looking at trying to learn how to trade realistically, okay, I'll give you the quick answer now. So the quick answer is yes. In order to, if you want to cover the realistic trader membership fees, yeah, you probably need to put, I don't know, maybe 20 grand. So let's say 20 grand. Let's say it makes 30%, which is pretty average with all these bots. Yeah, 20 grand means you'll make 6 grand profit. So that's that. Now here's the long answer, which is why it needs more. That answer needs way more context. So trading, in my opinion, is a 2-year journey at least. And what happens? So with us, obviously, if you become a member, obviously there's that 2-month free trial. But if you become a full member, it's a year's commitment. Okay, and we do that for lots of different reasons. Because really, it's a quality of care thing. Because we need to ensure that you're learning everything there is to do. Because if you learn, how can I put this? Yeah, okay, let's take the schooling system. So I'm not a fan of the schooling system. I love teachers, but not a fan of the schooling system. The schooling system is a time-based learning. By the way, and I say this lovingly because I am in the process of setting up my own school. Because I've been bitching about schools for too long. I may as well put my money where my mouth is and set up my own. So school is a time-based learning system. Okay, so it's like a sausage factory. You join at whatever age, and then they boot you out at 16 or 18, depending if you do A levels, etc. Okay, and after 16 or 18, really the school doesn't give a shit how much of the knowledge you've retained. Okay, you can leave being the worst student on the planet, but nope, you hit your age, you're out. Okay, so if you're ever going to learn something, you must not learn in a time-based learning environment. What you need to do is learn in a knowledge-based environment, if that makes sense. It's knowledge-based. So for example, if you look at a Swiss cheese, it's got loads of holes in. So in a time-based learning environment, this student's knowledge will be like a big old Swiss cheese with loads of knowledge gaps which should have been filled. Whereas if you do a knowledge-based learning environment, hopefully your Swiss cheese will have very tiny, very few knowledge gaps, if that makes sense. So if you look at, I learned all this from the Air Force really, because if you're flying military aircraft, what you don't want is someone to pass ground school or flying training with an average of a 60% pass rate or whatever, because you'll end up killing yourself. So if you look at all the exams in the Air Force in flying training, you typically need like a 90% pass rate, and then you'll still be bottom of the class with a 90% hit rate, pass rate. So trading is the same. So really, what happens is there's a massive learning curve, and so all those videos, as I've shown you, it's 60 plus hours worth of videos, basically. So you really need to go through that. Now, it sounds daunting, but it actually isn't. So most people spend a couple of hours watching TV every night. So just swap one Netflix per night with an hour of trading tuition videos per night, and you'll go through all of this in 2 to 3 months. Or some people just beast it in a whole month. But I'd actually prefer if you did it over a few months, because that way you're not skipping videos or etc. Now what tends to happen is, and at the same time, you then get set up on a dummy trading account. So what happens is everything you're learning, you can then practice risk-free with fake money. Okay, so you're getting used to the software, used to the systems, etc. But what tends to happen is that between month 3 to month 6, nearly all the students that I find get super competent and confident because they've done the course, they've been practicing as they go along, and they're like, this is really good. And so what that happens is that I'm ready to go. And so they then open up a live trading account and try and trade it manually live. Now, I always recommend don't put more than $2,000 in if you are going to do that, because there's still loads of learning things that you haven't come across. But also at the same time, to get rid of all of the pressure, because people feel, I don't have 6 months to learn and not make any money, etc. Or on day one, we just set you up on a live trading bot. So you can open up a live account, put some money in, whether it's 500 quid or $2,000 or 50 grand, whatever you have lying around. Put it in the bot, and the bot will just make money for you in its own, And I am very insistent that when you do this to begin with, you must put it. In fact, we do the bot setup with you, and we actually put your bot on the boring settings that my own money's in. I will never expose anyone to anything that my own money is not doing itself, if that makes sense. So I'm getting these returns from my boring bot. Well, that's what I want you to get to begin with. And then eventually, once you know how to trade and you know that everything, you personally will then know how to tweak things. So as you saw on that bot leaderboard, people were creating aggressive bots or they know what to tweak. And so at the end of the year, I then know that, and by the way, during the course, where is it? I think I've clicked away from it now. We have knowledge consolidation quizzes at the end of each section, just to make sure that you're not skipping things and you've got the right knowledge before we move on to the next section. And you also have mandatory one-to-one sessions with our trading mentors. Okay, and it's nothing scary. It's like they're really friendly guys, and they'll just ask you some questions, and they'll know what knowledge gaps you have just by asking you questions and stuff. So here's your first mandatory one, and yeah, I just don't want people to hurt themselves really. And at the end of the year, you're free to leave. But the average, most people actually stay with us for about 3 years. And the reason being is that twice a week there are live trading sessions, so trades being placed real time. And RT is more than trading. It's learning about money, investing. I talk about businesses as well, and all the businesses that I'm setting up or about to set up as well. And it's good, and everyone shares trades. So if we look at the main group, so obviously we had that free group, but then the main one is this one, the RT community. And people are doing really well. I mean, we got that transparent log, so everyone can see who's doing well, who isn't. And people are sharing their trades and stuff like that. So yeah, it's pretty cool. So I guess going back to your question, I think it was James, like how much money do you need to put in the bot? I have there's no correct answer, but this is how I see things. In the UK, we are, especially in the US and the UK, we've been conned into, I guess, degree inflation. Every man and his dog has a freaking degree these days. And I employ about 50 to 60 staff, and I'm constantly recruiting. And when I interview people, I don't give a shit about your qualifications. And most employers are the same as me. They don't give a shit about your CV. I don't even read your CV when you come in for an interview here. I hire people based on ambition and work ethic, and if you're trustworthy. So I don't care if you've got a master's degree in astrophysics. Like, all that shows that you can jump through the official hoops and retain knowledge enough to regurgitate on an exam or dissertation or whatever. So the way I look at and with uni degrees, it's ridiculous. Most people wouldn't even bat an eyelid spending 3 years at uni, getting minus 50 grand in debt, to end up with a job, if you look at the stats, between 25 to 35 grand. And historically, it'll take you 10 to 20 years to pay that off, because obviously you've got outgoings and stuff like that. And this is just like the rite of passage these days, is degree inflation. And the way I look at trading and this is simply, well, for a 1 year of intense training, it's going to cost you £4,800, and like you'll actually have a skill that's useful, unlike a uni degree. And yeah, I like with uni, you don't expect to make 50 grand in year one to recoup your costs. It's the same with trading. You should use that 4,800 as just it's your learning investment, and maybe in 3 to 5 years time you'll pay it back in spades and more. That's just my controversial thought. However, I back everything up in stats, and I did a little study. If we go to the WAP, go to our beliefs. This slapped me around the face when I came up with these stats. It's ridiculous. So, oh yeah, they're my 2 Ds for A-levels. I'm very proud of my Ds. Yeah, I was really pleased when I found them in the attic. So, here we go. Where is it? It's here somewhere. Here we go. So, where is the explanation? Oh yeah, so blah blah blah, round to point. Here's an interesting list of the average salary you'll earn 5 years after doing the top 20 degrees. Okay? It's really sad, it really is. Ta-da! So you get 50 grand in debt for 3 years, or more if you do a master's or PhD or whatever, and this is what you're expecting to earn. Or no, this is what people do earn. These are real stats from the ONS, the Office of National Statistics. So obviously, if you go into medicine, that's probably the highest ticket thing. Then economics, because you'll probably end up in a bank. Yeah, vet, that's medicine still. Mathematical sciences, you'll probably end up in some sort of data company. But other than that, oh yeah, and engineering. So other than that, you're pretty much screwed for life in terms of paying back your degree. So that was my very long-winded explanation of. And here's the crazy thing. Education, right? You become a teacher and you end up one of the worst paid things out there. Like, your kids are the most precious assets and things in your life, and what you don't want are teachers that are struggling to pay their own rent and mortgage, etc. So in my school, like, the minimum salary of the teachers in my school will be 60 grand a year. Like, you need to make teachers rock stars, not so anyway, I'll get off my high horse.
Like they do in Korea.
Yeah. So we shouldn't idolise footballers and bankers and whatever. We should idolise, nurses, doctors and teachers. Right, so I think I've got, oh, Jesus Christ, an hour and a half. And I haven't really... Okay, let's quick fire round of your questions. Platforms. The 3 jokes in the market, or Trading 212, eToro, and Plus 500. The reason everyone flocks to them is because they have the biggest marketing budgets of any broker on the planet. But they are jokes. They are absolute jokes. If you have an account with these accounts, just get rid of them now. So just stay away from them. I'll quickly elaborate on this. So with platforms, really quickly, you have two types. You have a market maker and you have an STP. Okay, and let's say the market's over here. Sorry, I'm super double time now. And you have two people. If you have a broker, which is a market maker, i.e. a bastard broker, plus 500 eToro and 212, what will happen is you will place a trade and they will go, all my clients are idiots and they always lose money, so I'm not going to put your trade on the market. They'll simply take the other side of your trade. So if you're risking 100 quid on this trade, and guess what? You'll lose the 100 quid. Not only do they make money on the spread and the commission for placing the trade, they get your 100 quid. So they're incentivized for you to lose. Okay? What will actually happen is that they'll probably have a fancy spreadsheet of good traders and shit traders. Everyone will be on the shit side because 80-90% of traders lose money, and there'll be very few traders on their good list. So if you're a good trader and you place a trade, they'll be like, oh, okay, let's not piss about here. Let's put that person's trade on the market, and if they win or lose, we're hedged. Doesn't matter. So you must not have a market maker broker. So what you need is a straight through processor broker, and they only make their money through spreads and commissions. So you place a trade, they don't give a shit. They put your trade on the market, and if you win or lose, it doesn't matter because they're simply the middleman. That is why I use FXCM. I've been using it for 10 years. I would also add IG Index to this list of shit brokers. Sorry, I'm so going to get sued one day, but bring it. Cash flow, I've talked about that. It's not good in the short term. Your pot is completely your call. Like in that free trading test drive, what we actually recommend is like you got loads of videos to go through. On day one, set up a live FXCM account, and then put 500 quid, 2 grand in it, and let the bot trade it for you. So and just see how it goes. So return on time invested, return on capital invested. I think we covered that with the business. Really, I would go business route because trading is just going to take a while. I'm sorry, we're going to have to cover this in the WAP or in the group. Sorry, we've been here an hour and a half, and I have a meeting at 2:00 elsewhere, not a Zoom one. If you have capital parked around, then I would seriously look at the bot, as in our community, because as I said, the bot's just chucking away, doing its thing. And if you have, in fact, here's the crazy thing, right? This is hilarious. So the other day, I've got this leaderboard here, right? So for the student leaderboard. And there's a name that keeps popping up in this leaderboard, okay? And his name is Ashley Brewster. Come on, internet. And so I've started on my YouTube channel to do an RT member highlight thing. So actually the first video went out today. This is him. And I'm just doing 15-minute interviews with some of my leading students. And I was like, hey, Ashley, so you're always in the leaderboard. Like this month you've made 3.5 grand. Like, what is your secret? And in that, he's very coy, but he was like, I'm just using your bot, Siam. So all he's done is he's put like 30 odd grand in his bot account. If we can actually look at his bot account. Here we go. Look his analytics. Here we go. So he starts off with 15 grand in his account. Did well. He made like 300 quid on that. He was like, okay, let's put a bit more in. So he topped it up to 30. And his 30 grand account is now, what is it, 34 grand. But all in all, if you look down here, he's made a total of almost 6 grand now since August. He says he's been using my bot, but he obviously hasn't got the same results as me. So he's probably jacked up, put the jack under the risk on that one, if that makes sense. So yeah, and I've done a few other interviews. Like Mark Adams, he's the other guy who is just using the bot. So I find that hilarious. So
does it ever lose?
Yeah, it does lose. Yeah, like in September, I had a really bad year. I mean, a bad month. So actually, we launched the bot in February. So here's the honest truth. So recently, I launched it. So the bot was built in 2018. it seemed too good to be true. So I did a live walk forward test for the best part of 18 months, and I was like, oh shit, it's actually working. So in February we launched it to everyone, but annoyingly I think I launched it a bit too early because there's loads of updates coming along the way, and I kept updating, and I made my standard default settings weren't that good. It was like losing 1% a month or 2% a month, and it was just a slow drawl, like down. And I realised I'd mistweaked some of the freaking settings, and I was like, idiot. So in June, July, I stopped. We got all the new updates out, and then I started again with the brand new default settings, and yeah, it's been great ever since. And what's happening, the really cool thing that I'm excited about, what day is it now? It's this weekend. So, oh wow, it's Friday. So in the next couple of days, we've got the biggest update yet. And what we're doing is we're doing automatic copying of the leaderboard, which is going to be insane. So for example, like in about a week, probably in a few days' time, if, for example, you're using the bot and you just want to copy Shamail's bot, there'll be another column here, and you click auto copy, and all of a sudden your bot will be the exact same settings as Shamail or Simon or whoever you want to copy. So what we'll then do, so users will be able to go, right, who is the best here? I like, someone with very low risk like this one, but nice yielding. Yeah, I'm going to copy Moran's bot. Boom. And then for the TJ, I'm going to copy... I always start with the drawdown. Look at that, 22 trades. Maybe not. Yeah. So I don't know who I'm going to pick on the TJ. So the cool thing is that the community are guinea pigs, but we're all guinea pigs in the same boat, if that makes sense. So that's that. So we talked about the bot, zero-sum game. Good question. So there are different types of trading. So sometimes, like, we traders get a bad rap because, all the money you're making is coming from pension funds and stuff. It's not. The way that we trade is a zero-sum. So we trade, the way we do it is called financial spread betting. So in the government's eyes, we're just gambling. So it's like going to the horse races, okay? And you're just simply betting on the movement of the horse, and we're all here in the crowd. And if you win money, all you've done is you've just taken that money from another trader. So it's a completely zero-sum game. So all the money I make is from other traders losing trades. And it's not really a zero-sum game because there's brokers in here taking their spreads and commissions. So it's actually a negative-sum game. But hey-ho. Bot, learning journey, capital part.
Can I just ask, when you put a trade,
yeah.
So say you're betting, I don't know, £500 sterling is going to go up.
Yeah.
There isn't who on the other end is betting £500 that's going down. It's just automatic. It's automatic, isn't it?
It is, because what happens?
I mean, what's stopping a million people all doing the same trade at once? Because you're not going to find a million people doing the opposite.
Yeah, what happens is the price goes through the roof. If everyone all of a sudden tries to buy a pound, it'll just go up, and it will go up until there are sellers, and that's when it's it stalls. So what happens? Let's just use FXCM. FXCM is the broker that I use, and obviously it's got loads and loads of let's call them clients or traders, and then let's say the market's over here. Well, FXM will be backed by a bank. So the bank will give it liquidity. So in here, FXM will have billions or hundreds of millions worth of liquidity. Okay. So when you place a trade on cable, pound dollar, and for your £500 move, etc., like in their order book, there's going to be thousands, hundreds of thousands of trades of people wanting to buy at that level, and on the flip side, there's going to be hundreds of thousands of people trying to sell at that same level at the same time. So the FXM is literally like a matchmaker, so to speak. Okay. Does that sort of make sense? That's a very quick answer. So it's a bit like, like in the 1980s when silver went from $3 an ounce to $50 an ounce. What happened is that all the jewelers in America were so flooded that they actually shut their shops, and they were like, right, everyone's selling silver on this side of the street, everyone buying silver this side of the street. And the bullion dealers are like, right, you selling, you buying, cool. They take their little cut, and they're just matching people on the street, which is nuts. That is pretty much what happens over here. So it's been 1 hour and 40 minutes. Thank you so much for your time. I know we've gone through quite a lot. It has been recorded. later on tonight, my computer's going to take forever to render this video, but I will send you a Vimeo link to it all. And yeah, I think I've gone through all the questions. If we had another hour, I could go through all of these answers in a bit more detail. But does anyone have any outstanding questions? Go for it, Dwayne.
How much does a bot cost?
Oh, it's all part of the membership. So with the RT, it's either 4,800 a year or 500 times 12. So it's a lot of people say, "Can I just pay for the bot?" But no, I don't. It's like the bot really is like an autopilot in an airliner, and you don't take a random person off the street and put them in the cockpit just to press a button. You put a fully trained pilot. You put a fully trained pilot in the cockpit to then And although the autopilot these days flies the aircraft 90 to 95% of the time, it's like with this. I only want fully trained traders using the bot because they'll understand it more. And what will always happen is if someone doesn't know how to trade and use the bot, have a losing month or something doesn't work, whoa, what's going on here? And it's like, all of that bullshit hassle is just eradicated if I just only let fully trained traders use it. Sorry about my language today. I don't know what's going on. Hopefully today's helped. Has it helped?
Yeah. Brilliant. Very good.
Cool. Well, worst case scenario, hopefully I've actually deterred you from trading, because if you still
I want to join you. I'm going to sign up.
Yeah. So at the very least, just start off. I'd be more than happy if you wanted to come in as a full member straight away, but it's probably more prudent just to start with the free trading test drive. That way you get 2 months.
Yeah. Okay.
And if after the 2 months you like what you see, you then become a member, then you've got another 12 months. The 12 months start from whenever you join us. So really you're getting 14 months of stuff here. So.
Oh, yeah. In the free trial, can you do the bot as well?
Yeah,
with your own
literally.
money?
So
Cool.
we actually recommend, if you look at the portal, the first thing we do is we recommend you to get set up on a live account, put some money in it, and then we'll hold like an induction call, and then we set up the bot for you. So that way, whilst you're going through all of the videos, the bot will just be making money for you.
Lovely.
Yeah. And so
it sounds really bad because obviously you've said trading's probably not for you guys or whatnot. And then my immediate reaction is like, I love it. And you're not supposed to be emotional.
No.
But I do have money that I need to I just need to grow and do something with. It's just sitting there and doing nothing.
Exactly.
So
I have the same issue because I've got all my savings. And it's like I've got to do something.
yeah, it's just sat in a bank account doing nothing. And if it helps, I'm like, in terms of confidence, I'm in the process. I don't know if I'm going to be successful. I'm trying to personally raise £1 to £5 million, and I'm prepared to pay 10% APR. But it's hard. All the lenders have just dried up. Because what I want to do is I want to put a couple of million in the bot, and because I know it's going to make more than 10% a year, so it's just easy maths for me. But obviously, since lockdown and all that, no one is lending. So. Anyway, so let's call it a day. I've got to shoot. I've got a 15-minute drive to get to somewhere at 2. I'm going to love you and leave you. I look forward to seeing you all in the beginner Facebook group on the free trial, and have a lovely weekend.
All right, cheers.
Cool.
See you later.
Take care, folks.
Bye-bye.
Bye-bye. Now is that awkward time where I need to try and stop Zoom. Here we go. It's here somewhere.
Recording.
Here we go. Done. And I'll email the recording.